You are watching Market Pulse Daily. Markets closed Friday, May 22, 2026. Here is where everything ended the week. If you want a clean daily read on macro and market risk, subscribe for the next briefing. Stocks close week higher, but what's lurking beneath the surface? Today's agenda: U.S. equities, gold and silver, Bitcoin and crypto, oil and commodities, FX and bonds, market update. Let's start with the big picture, the stock market. U.S. stocks closed the week on a high note Friday, with the Dow Jones Industrial Average and the S&P 500 both setting new record highs. The Nasdaq also posted gains, as tech companies continued to lead the charge. This broad-based rally was supported by a slight moderation in Treasury yields from their recent ascent, which provided a more favorable environment for growth stocks. However, beneath the surface, concerns are growing. Analysts are flagging potential weakness in the hardware sector, with some pointing to the Cerebra's IPO as an early warning sign. This divergence between the strong performance of major indices and specific sector vulnerabilities suggests a bifurcated market. As we head into the weekend, investors will be closely watching upcoming inflation data and key corporate earnings, particularly from Nvidia, for any clues about the sustainability of this rally. Any signs of overheating or unexpected weakness could trigger a significant shift in market sentiment. From stocks, let's turn to the traditional safe havens, gold and silver. Gold and silver prices experienced a decline on Friday. This pullback occurred as geopolitical tensions in the Middle East showed signs of easing, particularly between the U.S. and Iran. With the immediate threat of major conflict receding, the market's demand for safe haven assets like gold and silver diminished. This led to a sell-off, as investors shifted their focus away from these traditional havens. While physical markets closed Friday, gold and silver futures will continue trading over the weekend, providing an early indication of sentiment for the coming week. The key drivers to watch will be any renewed volatility in oil prices, which could reignite inflation concerns, and any commentary from Federal Reserve officials regarding their interest rate policy. These factors will be crucial in determining the next move for precious metals. Now let's dive into the world of digital assets. The cryptocurrency market experienced a notable pullback on Friday, with Bitcoin and other major digital assets declining by 2 to 3%. This came after a significant liquidation event, where over about $563 million in long positions were wiped out in just 24 hours, marking the largest such event since February. Ethereum and Bitcoin were the most affected by these liquidations. Despite this short-term bearish momentum, the underlying narrative for Bitcoin remains strong, with continued institutional inflows through ETFs and companies like MicroStrategy actively accumulating more Bitcoin. This suggests a growing belief in Bitcoin's long-term value as a hedge against fiat currency debasement. Over the weekend, traders will be closely monitoring Bitcoin's ability to stabilize around its support levels, particularly the psychological about $70,000 million SARC and the about $72,000 to about $73,000 range. Any signs of a bounce back from these levels could indicate a short-term reversal. The broader crypto market sentiment has dipped into fear territory, but the ongoing institutional adoption and the potential for future Federal Reserve pivots continue to support a bullish medium-term outlook. Let's shift our focus to energy markets. Oil prices experienced significant volatility on Friday. WTI crude is trading at about $97, slightly higher on the day. This stabilization came as geopolitical tensions in the Middle East showed signs of easing, which provided some relief to the market after earlier price spikes. However, the underlying factors that drive oil prices, such as potential supply disruptions and global demand, remain in play. The market is still factoring in the possibility of renewed tensions, which could quickly send prices higher again. Over the weekend, the focus will remain squarely on any further developments in the Middle East. Any escalation or de-escalation in the region will have a direct impact on oil prices. Additionally, global demand trends and inventory reports will be closely monitored for their influence on price direction. The ongoing volatility in energy markets underscores their importance as a key indicator for inflation and broader economic activity. Now let's look at the currency and bond markets. The U.S. 10-year Treasury yield held relatively steady on Friday, hovering around the 4.6% mark. This level represents a key resistance point that the market has been testing. The dollar index also showed limited movement, trading within a narrow range. This stability in both Treasury yields and the dollar provided a supportive backdrop for the stock market as it closed out the week on a high note. The moderation in yields from their recent ascent is particularly noteworthy, as it suggests that the market may be anticipating a peak in interest rates, or at least a pause in further hikes by the Federal Reserve. This stability is generally positive for equities, as it reduces borrowing costs for companies and makes U.S. assets more attractive. As we look ahead, the upcoming inflation data releases and any commentary from Federal Reserve officials will be crucial in determining the future direction of Treasury yields and the dollar. These factors will significantly influence market sentiment and risk appetite in the coming week. Weekend snapshot: closed markets show Friday close. Now for the latest market snapshot. Since this is the Saturday edition, stocks, bond yields, and several traditional market series are closed. For those assets, these are Friday closing levels from May 22, 2026. Crypto remains live through the weekend. Gold is trading at about $4,520, slightly lower on the day, and is slightly lower over the past 5 sessions. Silver is at about $76, slightly lower today and lower over the past 5 sessions. In crypto, Bitcoin is at about $75,400, lower on the session and lower over the past 5 sessions. Ethereum is at about $2,050, sharply lower today. Other major crypto: Solana at about $84, sharply lower. BNB at about $648, lower. XRP at about $1.331, lower. At the Friday close for equities, the S&P 500 at 7,473.5, slightly higher. The Nasdaq at 26,344, slightly higher. The Dow at 50,579.7, slightly higher. For international equity markets, the latest available closes show the DAX at 24,888.6, higher. The Nikkei at 63,339.1, higher. The FTSE at 10,466.3, slightly higher. On bonds, using Friday closing yields, the 10-year U.S. Treasury yield is at 4.6%, slightly lower at the Friday close, and the 30-year yield is at 5.1%, slightly lower. Elevated yields continue to place pressure on risk assets and growth valuations. Rounding out the macro picture, with weekend-sensitive assets shown at their latest available levels, WTI crude at about $97 per barrel, slightly higher. The dollar index at 99.32, slightly higher. Euro-dollar at 1.161, slightly lower. The picture is mixed across asset classes. With no dominant directional theme yet, investors are watching macro catalysts closely before committing to a clear risk stance. As markets close for the weekend, investors are left to digest a week of strong stock performance, a dip in precious metals, and ongoing debate about the sustainability of the current rally. Key economic data and corporate events loom for the week ahead. Thank you for your attention, and we will see you again tomorrow.